First of all, a happy new year to you all. Hope you've all sobered up by now. I guess it's now all about getting back into shape. Or as a friend of mine put it, don't blame it on the Christmas food, you were fat already back in August. Now, this channel is just a month and a half old, but it's fattening quickly, and by the end of this year I expect it to be the size of a whale. A life-saving whale to most investors and traders out there, as there are 13 caveats on the dozen for anybody who moves money around for value. So do yourself a favor and subscribe, for I will teach you everything I know, as well as continuously presenting my ongoing prospects accompanied by deep technical analysis. For trading successfully is a minefield, to put it mildly, and anybody who says differently probably didn't include their missing legs in their profile picture. I'm here for you to show the true nature of technical trading, both its ugly sides as well as its beautiful ones. For anybody who says technical analysis is all rosy and easy is most likely trying to sell you something. Now, let's get down to business. My initial plan was to make a TA on a few indices such as the OMXS30 and the German DAX, as well as a few prospect swing trade positions. But I will put that on hold for a few days, as something much more interesting has caught my attention. A Swedish gaming company called Starvolt. Normally I wouldn't touch micro companies like this one with a 10-foot pole, but this is a different case, for I have a long history with this one and I know the company and its products very well. Before we get started, however, do note that nothing in this episode is financial advice. Everything here constitutes my own personal views and opinions. Do your own due diligence before any investments. Having said that, I do own stocks in Starvolt. First of all, to give you all a quick briefing, Starvolt is one of the single companies that have generated the biggest net profits of mine. In 2007, at the peak of my online poker career, I was one of their biggest investors, holding about 5% of the company in a private placement deal prior to its IPO. I was also one of the key figures in helping them to raise much of the money needed to exist at all. In about half a year, the stock price had gone up by some 500% from my private placement price. The company though ran into difficulties and the stock price went into stalemate. That's when I sold off my entire position to focus on other stuff, not at its peak yet still at a very hefty profit. In 2012 I moved to London. A few months later, I was lucky enough to buy a chance position at its very bottom. Yeah, lucky. Dumb luck, nothing else. 10 months later, Starvolt had gone up by 1700%. I sold again not at the top, far from it, but still at a juicy green number. And very recently I sold off a bit of my QuickBit all-in position to both spread my risks as announced in episode 3, The Deadly Market Herd. I'll link to it at the end of this episode. And because it began to look interesting from a technical standpoint. In the short term, the potential is greater in Starvolt than it is in QuickBit, which makes it a fit swing trading position. QuickBit still remains my front runner, however, as it is a strong position trade, whereas Starvolt at present is merely a swing trade. For those who don't know, the difference between the two is the time intention you enter your trade with. A swing trader generally buys or shorts with the intention of keeping a trade for anything from a few days to a few weeks. It could of course stretch for longer than that, but then it's often an unwanted result for swing traders, whereas a position trader generally buys or shorts to hold for a few months or even a few years. Now on to the main part, the technicals. First of all, we could have a big bull flag in the making, albeit a really ugly one. If it doesn't pan out as a full-fledged flag, it at least still has the classical higher lows for a bullish inclination. The pole begins at 0.06 and stretches all the way up to 0.17, thus making the difference 0.11. If we add this length per classical technical analysis to the upper resistance, we get a target of 0.28, which perfectly aligns with a former resistance line. Enough with the daily chart, for in this analysis I'm mainly going to focus on the weekly. This is a good thing, as the higher time frames give off less noise and misinformation. Compare this to the 1 minute chart, for example, which is noise, noise and noise. From a technical standpoint, there are 3 things that have caught my attention, all of which were enough to convince me of taking a position. 1. Since 2013, we've had no less than 13 rejections of the EMA 200 on the weekly. Now, why is this good, you may ask? A rejection is a bearish sign. It is. It is indeed. But doing TA is putting more than one piece together. It's a puzzle. And once you see the other pieces, this picture emerges into quite a beautiful one. Just like a support or resistance line gets weaker the more times it's tested, the same applies to EMAs. And the more times it's tested and rejected, the stronger the outburst tends to be once it breaks through. Just look at Bitcoin as it bounced time and again at around 6,000, just to plummet in a free fall once it did break. 2. The second piece of the puzzle is the RSI. In September 2010, the RSI entered the bearish RSI channel and remained there until September 2013, a total of 3 years. I will discuss bullish and bearish RSI channels at length in a future episode, but for now, all you need to know is that once the RSI primarily hovers between the blue RSI lines, the underlying equity is trading with bearish tendencies. And once it trades between the red ones, it signifies bullishness. Costanza and Brown talks about this at length in the book Technical Analysis for the Trading Professional. It is a must-read for any seasoned technical analyst, but an off-puttingly difficult read for any novice. There is much room for confusion about this quite complex topic with all its specific rules, so let's leave it at that for now. As you can see, the price has steadily gone down despite the RSI hovering around in the bullish red field. A bullish RSI channel doesn't necessarily mean the price is bound to go up. What it means in this case, for example, is rather that there is a lot of explosive upwards power should the price break upwards. We have seen this on previous occasions whenever we've had clean touches on the lower red line, which is one of the strongest RSI channel signals available. In this case, the stock went up by a staggering 2,100% in 10 months. In the second case, it went up by 320% in just 3 months, both after having had clean touches on the lower red line, the bullish line. As we both have had clean touches on the very same line again, as well as made a double bottom from 2012, there is reason to suspect this may happen again. Or to put it another way, the risk to reward looks incredibly juicy as the downside is still high, but the upside being immense. This RSI talk may come across as gibberish to some of you, but it is one of the technical tools that has generated me the most profits personally. Not on its own, of course, but in combination with other pieces of the puzzle, like now. And 3. Now on to the final piece of the puzzle, which is also the strongest of them all, the volume. We've had nothing but insane trading volumes lately. For some reason though, my charts don't show the trading volumes before September 2013, but since then the volumes as of lately have, as you may very well see, been unparalleled. Note also how all the big volume bars have taken place at upwards outbreaks. Each time from that the actual outbreak has taken place, we're talking about gains between 100 to 300% each. The only exception is the recent high volume cluster as the buyers defended the all-time bottom. So putting the 3 pieces together that I have just outlined, given the present interest which has manifested itself in terms of trading volumes, the incredibly strong RSI signs and the prospect of breaking the EMA 200 and actually staying above it, StarVault might very well be the strongest TA swing trading case I have seen in 2 years. The price may of course still go down, but I regard it as flipping a coin but getting rewarded by many times my investment should I be lucky enough to win. Normally, per classical technical analysis, you buy the outbreak, although in this case, given the potential, I'm more than happy to front run it because if it breaks, chances are it will move fast. I do own stocks in StarVault myself and I'm excited about the weeks ahead.